food, meals, travel. Let's help you avoid some key mistakes. As a business accountant, my team and I spend all day long helping business owners on their journey. And as you can imagine, record keeping and how to deal with some of these key expenses a business might have is absolutely an everyday conversation for us. And as a result, there's some very common mistakes we see often that I wanted to come on and tell you about, just because, I mean, actually with clients recently, this has popped up quite consistently when I talk to our bookkeeping team about, you know, what are you seeing? What do you think people will be interested to hear? And this one pops up a lot because it's an interesting point that if you get it wrong, you can lose tax deductions, or the other side of it, you can have too many tax deductions and you might therefore have a problem if the revenue came and looks at your tax return. So I wanted to talk to you about these key mistakes to avoid and the things you've got to do to sort it out. They're quite easy, straightforward, but I think it helps to kind of cover the differences about what is and what isn't tax deductible in general on some of these key areas. Before we get into it, if you do like these videos, be sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So top mistake number one, and that's just actually not capturing all of your records. So you've heard me say, if you've watched many of my videos, you would have heard me talk about the fact people ask, what's the most important thing? How do we save the most amount of tax? What's the one key thing? And it's always keep good records. And this starts here. So you want to make sure you're capturing receipts. Now, I'm awful at this, and my internal team shout at me all the time if I'm out and about, and this is also prompted part of this video because I'm just as bad as every other business owner I know, and you can lose receipts. You are out and you buy a coffee for someone and you're out there chatting about business, and then you lose the receipt because you left it at the till, or you've screwed it up in your pocket and it's fallen out, or you put it in the washing machine and it's gone, and you might have paid for it out of the cash in your pocket and then, or your personal card, and forgotten about it, and then it never sees the light of day in your own records where you would get your tax relief or not get your tax relief. Either way, you've spent some money on the business and that should be accounted for somewhere. And of course, you don't get to see that benefit. So keeping the receipts is the first one. Now, it sounds obvious. You're like, yeah, okay, I'll get it, keep receipts. But how can you improve that? I think the answer is use technology. There's some great apps at the moment. Dext is one of them. It's a third-party app that you snap receipts on. It used to be called Receipt Bank, which made a lot more sense, didn't it? But you'd click and snap your receipt, and it would transmit that into your software of choice, to say like your Xeros or your QuickBooks or something along those lines, if you're in those sort of things. If you're not, then obviously it's a bit harder because you'd have to record it in your spreadsheet or record it in whatever system you're using. But if you are in the cloud, which particularly if you're a limited company, I think is almost essential these days, and as we move into the world of what's known as making tax digital from April 2026, at the time of recording this video, you're going to have to keep digital records and transmit things digitally to the revenue anyway. So hopefully you'll be in these products. But if you are, then you can also use both Xero and QuickBooks taking these products, also have their own kind of inbuilt, or they're maybe with Xero currently at the time recording there is kind of a third-party app called HubDoc that will also do it. But you want to make sure that you're capturing them from the app. QuickBooks has a native one in it. It's not actually as good as something like Dext or as good as HubDoc and its connection. These third-party apps that connect to the other apps, and that sounds a bit weird, but they are actually far better. They do read data very well, and you can set automatic publishing rules up and things, and that's a whole other video. But explore the tech. That would be my number one thing, and I would actually snap it before you walk away from the till. I quite often infuriate people, I'm sure. If you ever stood behind me and I've ordered something in a Starbucks, I will end up sitting there and snapping it before I actually walk away to make sure that I've captured it and I don't lose those receipts. The hard bit is making sure to get the receipt in the first place, because a lot of places won't immediately give you those receipts. So making sure you capture all of your receipts is certainly mistake one to avoid. Now, the biggest one that comes with this, we spoke about tax deductible, not tax deductible. So mistake number two is actually getting the categorization wrong. So if you're keeping your own records or you're giving it to an accountant or a bookkeeper to do, and maybe you haven't marked it up clearly, there's some key things that you need to sort of determine, and it's key to keep it almost in different piles depending on what's happening. So for example, it's very common things. You going out with a client and buying them a cup of coffee or a cup of tea wherever you're going is what's known as client entertainment. And that sounds weird. It sounds like you're going down some sort of like strip club, and there could be that, and that's also another type, but you know, and all these alcoholic drinks and all the rest of it makes it sound like a big party, doesn't it, entertainment? But it actually can be as simple as you buying someone lunch, buying them a sandwich or a bit of cake and a coffee. And if you're there as well and it's discussing business meeting, business purpose, that's business entertainment. And that's completely fine for you to pay for, whether you're a sole trader or a limited company. If you're a limited company, it's really important to keep it in the records because that's the company's money being spent. If you're a sole trader, I'd say it's less important because there isn't actually any tax relief on it. There's also no tax relief in the limited company, so you don't get it. So you don't get to knock it off your profit before you're taxed. That's really how the tax relief works. And we've done other videos talking about what tax deductible actually means. But actually, in this particular example, yeah, if you're a sole trader, it doesn't matter. If you're a limited company, then you do need to know and mark it clearly in your records and categorize it as business entertainment so that anybody doing your accounts or doing your calculating your tax bill will know not to include that or to what's known as adding it back, to ignore it for the purposes of calculating your tax bill. So that's really, really key. So if you're using an app, you might want to write on it entertainment. If you're doing your own bookkeeping or you're not using an app and you're just going through and categorizing your bank, say, for your company, then you're going to want to make sure you use business entertainment as a category. Now, some of the softwares, particularly older ones, can have, or like ones where you've transferred them into the cloud, can often have something like a dual category where say something silly like meals and entertainment. Well, it's actually okay in some instances to have a meal and that be tax deductible. So for example, if you were traveling overnight to a temporary workplace, you're having to stay in the hotel to attend, say, a one-day course the next day or a one-day conference, all to do with your business, then normally the hotel is going to be tax deductible as kind of travel. And the meal for you staying there overnight is going to end up being tax deductible. So not all meals are not tax deductible. If you're out there yourself, it's almost what's known as a subsistence event, an expense. So you're going to be out there doing those, they're fine. So again, you want to categorize those. And I'd always say to people, more categories is better than less. So you could have one for travel, but you could also, that could include your mileage or your train ticket or anything like that. But you could also have one that says entertainment and one that says subsistence and things like that. So break them down. You can even have one that says client meals if you didn't want to categorize it to entertainment, or client coffees. Depends how granular you want to go. Because a lot of the time, the people reading the accounts, the most people interested in the real kind of minute details, going to be you if you're looking at your figures to think, oh, really? I spent that amount on client coffees. It just depends how much you want to break it down. A lot of people just have an overall category for something like travel and subsistence and entertainment, and they'll put it in those categories. And if you're not in the cloud and you've got a spreadsheet, again, those kind of headings in columns might be quite important. But again, if you're heading columns in a spreadsheet, you really need to make sure that you segregate the two. That really is clear. That's entertainment, sort of food and drink, and that's actually food and drink while I'm out entertaining, so it's really obvious which is tax deductible and which is not. And that is a massive mistake we see quite commonly. And the third mistake is also records and software related, and that's if you are in software. We see this so often, is someone has been doing the two things I just spoke about. Actually, they've categorizing it beautifully and they're capturing it beautifully, but what they're not understanding fully is how to deal with that inside of their software. So if you've got like a Xero or a QuickBooks, I use a QuickBooks example in this because this is seen very frequently, is you might have snapped it, so you've captured it, and then you've gone into the program and you've said, yeah, this is business entertainment, and it sits there as like an unpaid bill. So it'll sit there and say, not all editions work like this, but this is the majority of the kind of the more essential, standard, normal editions will have this thing where you end up having like a bill. And then you go to your bank and you see the payment for that receipt in your bank. Now, what should happen is you should match the two together. You sort of pay off that bill with the bank payment. And there's different ways of doing this depending on your software. But sometimes clients won't, for whatever reason. Sometimes it's the interface in the software can be confusing because there is a bit of unpicking if you've got multiple items, or sometimes there's multiple items at the same value and it's not that easy. And a client will go in and we'll see business owner then categorize it as entertainment in the bank. And what happens in the records is you've got an entry in that you've made in the bank for that. So it's in your records. Let's say it was £10 on coffee. So you've got a record that says I paid £10 on coffee and client entertainment here. And then you've also got a bill that says £10 client entertainment. So if you were to run your profit and loss to see how much money you made, you'd have a £20 deduction where there should only be a 10, and that bill sort of sits there forever. And we quite often, when we come in to mop it up at various times in the year, we're asking these questions about, well, surely these receipts have been paid. I haven't seen any coffee shops that give you terms and time to pay, and then you quite often can see clearly that it's a double entry in the bank. So just be careful if you are using the software. It's hard to describe on a video, but it's very easy to double enter it. If you're entering the receipt and entering the bank transaction, you've likely got a problem. You want to be matching the two, paying the bill. There's different terms depending on the software. And this doesn't just happen in software. If you've got a spreadsheet, we've seen it sometimes as well. Someone will do an export of their bank, their business bank, and categorize it all. And then they'll do a separate log of receipts. And of course, if you're not kind of matching or reconciling, as the term's known, the two, then it's very easy to sort of add up all those receipts and put them in your box. In your, say, your personal tax return, you add up all your receipts in and put that figure in the box. And then you've also got all of the ones you've categorized from your bank. You're also putting that figure. Some of that might be doubled up if it's been paid from the bank. So it's really important to just make sure that you're only matching things up correctly and getting the actual correct figure for the amount you've spent on all of these expenses. So recap on those three. So making sure you capture everything, use tech to help, making sure you categorize correctly the difference between entertainment and travel. That's quite key. So different meals could be travel and subsistence, or they could be entertainment. Those two have different tax treatments, so make sure you're categorizing them correctly. And then for the third thing, making sure that actually if you are doing the right thing and capturing all of these things, you're actually not double accounting for them by putting them either in two separate areas in your spreadsheet or including them in two separate areas in your software from both the bank and in terms of a receipt or a bill, as it's often called in some of these softwares. So that's it. Hopefully you've enjoyed this video. Go dig around with your own receipts, make sure you're capturing them, and please do share it with anybody that you think needs to know this information, and I'll see you in the next one.